everyone and welcome to Buy Now Sell Now weekend. And after a very tumultuous week, finally, we've got lots to look forward to come next week.
Absolutely. I think Monday is going to be the big day that everyone's watching out for. The union budget will be presented. So let's await all that the finance minister would be telling us. But let's get you a quick glimpse of all that we'll be discussing on the show this today. We will have some investment ideas that we'll be discussing, especially when it comes to the GST space. That is a much awaited topic for the budget session. And along with that, we'll also be taking on board your questions on a spice check.
Well, it's a budget special show, so today we will also be discussing some of the top ideas and market expectations ahead of the all-important budget. Our guests are with us, so let's introduce them. Mayuresh, Joshi, Fund Manager, Angel Broking. On the fundamental side and on the technicals, Hemant Kapadia, Senior VP Institutional Equity at KR Choksi Securities. Gentlemen, lovely having you with us. Thanks so much for joining in. In fact, let's get started off then with the first query for the day. This one comes in from Harsh Bhatia. He's a software professional from Mumbai. Wants to know the view on logistics stocks.
A general question I would like to ask is, considering GST round the corner, should we acquire any logistics pack share which is expected to have an impact with the GST? Let me know which share which you take from the pack.
If you have to talk about one theme that everyone's watching out for very closely, it's GST for the budget session, Mayuresh. So let's start off with your view. We are all hoping that the bill has a smooth passage. But nevertheless, if it comes to, the logistics space, players like a Gati or even a Gateway District Parks, etc., is there anything that stands out from this pocket, keeping the GST bill in mind?
Hi Megha, I think clearly the GST is going to have huge amount of implications as far as the Indian market is concerned. Now the question is when, and the timing thereof is highly questionable at this point of time, looking at the political situation that we've probably got in Parliament related to the three issues that the Congress has raised. However, I think once the GST passes in the coming few quarters or months, you're probably talking about logistics stocks doing exceedingly well. Within the space itself, I think you've got stocks like Gati, Gateway, Transport Corporation, VRL Logistics, and individually I think all these companies probably have delivered earnings growth over the last 2 to 3 years. Within the space itself, Transport Corporation is something that I really like on declines. Clearly it's an asset-light model that the company pursues. Out of the 7,000 reefers trailer trucks that it owns, 20% are owned, 80% are leased. Out of the 4 business divisions that it's got, the supply chain solutions is doing exceedingly well. And our own expectations are, with auto volumes expected to pick up, this segment can do exceedingly well as well over the next few quarters. Clearly, if you talk about their other 2 business divisions, which is Seaways and Freight, that divisions are expected to perform reasonably better as well over the next few quarters. And though the top line growth specifically in relation to supply chain solutions as well as the express division has done reasonably okay over the last few quarters, and mixed set of numbers were probably reported in the quarter gone by. Our own take is that with the asset light model, it has got both in terms of how it owns trucks, trailers and reefer vehicles. Even the warehousing space is taken on lease of around 10 million odd square feet that it possesses at this point of time. So we're clearly expecting a 5% top line growth close to that 2,650 odd crore mark over the next 2 to 3 years. We're probably looking at a EBITDA margin of 8.5%. And clearly I think most of the capex will go to margins which are accretive in the supply chain and the express division. So I think Transport Corporation is something that I'll probably look at, but not at this point of time. I think let the budget come through, let the Q4 results come through. After that, I think a slow and a gradual way of accumulating Transport Corporation on declines is the way to look at the logistics sector, in my opinion.
Okay, that's a view coming in from a fundamental standpoint. TCIL standing out, operating on an asset-light business model, and Mayuresh believes that the lack of capital is not likely to hamper growth for the company. In fact, if you just map the 6-month returns of some of these companies, you'll see that TCIL has comparatively been better off as compared to some of the other stocks within this sector as a whole. Gati, for instance, has tumbled something like 30-odd%. You've got a VRL Logistics also, which has had it pretty rough. In fact, that stock is down and out. All cargo, a downtick of about 7% or so. A 35% plus cut coming in for VRL Logistics off late. In fact, the ride has been pretty hard for the company given that the stock has been battered out of shape. All cargo, TCIL would be some of the stocks that have managed to stand out in comparison. But as Megha said, lots of promise within the logistics sector as a whole. And Hemen, from a technical standpoint, let's understand what exactly stands out according to you.
A lot of stocks were discussed, but technically speaking, they have all entered corrective phases, Avan, and I don't think that seems to be in a mood to go in a hurry, whether it's Aegis Logistics, whether it's Gati, whether it's Gateway District Parks, they all are down and they could go down further, notwithstanding some recoveries, permutation combinations, but I don't think the time is now ripe to look at them. Even the monthly mechanical indicators have turned bearish, so I'll stay away from this at least for a quarter.
Okay. Hemen is advising that one should stay away from this particular pocket. But Harsh has got another question for us, and this time, on the aviation bag. That's a sector that's been, doing well, all thanks to, the way crude prices have moved globally. We are looking at multi-month lows, and that's led to a good performance in this quarter. But Harsh, take us through your investment in a SpiceJet.
I bought SpiceJet for a price of 65.8 rupees, 30 shares with the time horizon of 2 years. So again, I want to ask whether should I hold, sell or acquire more.
Okay, a query coming into the aviation space, and on account of what crude oil has been doing, these stocks have certainly been in focus. Since we're talking 6 months, let's take a look as to what SpiceJet has done over the last 6 months, and it's been a stupendous rally to say the least. The stock has moved steadily and gained 156% in the last 6 months. In the news as well, but let's understand what exactly Harsh should be doing with this investment. 65.8 is where he's bought it at. The stock is trading sub that level at about 64.3. I'd like to get in your call, Mayuresh. From a slightly longer term perspective, do you think that Harsh here should hold, sell or buy?
Clearly, since the investor has a time horizon of more than 2 years, my opinion would be that he can definitely hold on to the stock. All the right things are probably happening for SpiceJet at this point of time. Ever since the new promoters come in, the fortunes of the airline have changed. The profitability probably over the last 3 quarters has been very, very consistent. You're talking about fuel injection systems and a new monitoring system being put in place, which probably optimizes costs. And clearly with ATF prices correcting to the levels that they have, you're probably talking about lesser fuel costs as input costs stay benign for this airline. Secondly, I think if you look at the debt levels have been steadily coming down over the past few quarters. And as operating cash profits or cash flows improve, our own take is that these debt levels will still keep on coming down steadily. Thirdly, I think if you look at the overall dues that SpiceJet has, even that has come down significantly, whether they are dues to the Airport Authority of India or the other creditors. I think that time lag and those payables probably are much lesser than what we've probably seen a year or a couple of years back. With load factors improving, our own take is that the airline is efficiently operating and the operating leverage benefits are very, very evident. So clearly, I think if the investor is possessing a time horizon of more than 2 years, he can definitely hold on to a stock like SpiceJet.
Things certainly seem to be turning around for SpiceJet particularly, and the aviation sector in general. You had Mayuresh flagging of all the positives, how the plant load factors improving, and of course the global oil price declines working out well. But Hemen, a word on the technicals and how they're shaping up. We've got the viewer here buying the stock at close to the current market price, so he's losing out marginally, but just the way the charts have played out, do you think he stands to make some money from these levels?
Well, yes and no. I think I would have advised him to give a stop loss of 62. It's close to his purchase price, but since he specified that it's a 2-year investment horizon, I would suggest he deepen the stop loss to 50. We seem to be positive on the longer term charts. We are in a long term uptrend, but we went in an intermediate correction. And looking at the quantum of the rise from almost 15 to 95, it's going to take a few months, maybe a couple of quarters of a correction. But yes, the bigger picture seems positive. So hold with a deepened stop loss of 50 since it's a longer term investment horizon.
Okay, there you have it. That's the consensus call coming in on SpiceJet and what exactly you need to be doing with that stock. Hold at the current levels according to Hemen, and even Mayuresh saying that he has a fairly neutral stance when it comes to this stock. On that note, we'll slip into a quick break. Do stay with us. On the other side, we'll be putting the focus on the upcoming budget, talk about which are the sectors that are likely to be impacted. Stay with us.
Thanks very much for staying on with us right here on BNSN Weekend. And with the big budget coming up, it's all about what the FM is going to dole out on Monday.
Absolutely, all eyes on that, and perhaps that could even to some extent give direction to the equity markets, which have been so far hinging on some macroeconomic cues as well as on global cues so far. Well, let's talk a little bit about what, the key expectations could be from the upcoming budget as well, because some would say it's an impossible trinity that needs to be met. Fiscal space needing to be created, that clearly seems to be one of the key priorities. There's meeting the fiscal consolidation requirement, a boost in public capex as well, which would be increasingly important for India Inc. Is there going to be an on-ground improvement when it comes to the infrastructure sector, real estate, and a lot of the macroeconomic related sectors, rate sensitives rather, the higher wage and pension bill? At the same time, there's expectation on some clarity, as we already discussed, some sort of tangible timeline for GST implementation, as well as a clear roadmap for corporate tax reduction. That is something that would be expected. Meeting the fiscal target for FY17 as well is to a certain extent awfully challenging, but according to a lot of experts, not entirely impossible. So I wanted to talk to you, Mayuresh, as to what exactly some of the key highlights will be. What is it that you would be watching out for from Finance Minister Arun Jaitley come Monday?
Clearly, Avan, I think specifically from a budget perspective, the fine balancing that the Finance Minister would have to do in terms of how he manages the fiscal consolidation on one part and how he probably manages the spending specifically in terms of infrastructure and rural areas. I think this is one key area to be watched out for. Clearly, if you talk about how we are perceiving FY17 numbers from our estimates, we are still expecting a reasonable growth to happen, at least on the direct taxation front as far as the revenues are concerned, and they will probably grow in line with how the nominal GDP grows. The indirect tax collection has been pretty robust for this year, and we still expect that to increase substantially over the coming year as well, both in terms of savings coming in from crude as well as increases in service tax rates. So these two factors probably are going to have a compounding effect in terms of how revenues pan out. A huge amount of devolution is expected to the states. We're still maintaining reasonable divestment targets of 50,000 odd crores for the coming fiscal. And clearly on the expenditure part, our own take is to boost investment spending. 45,000 odd crores additional capex will be spent to revive the investment climate in the country. We're still expecting a 10% budgetary allocation increase to rural discretionary schemes, close to that 75,000 mark. And even on the subsidy front, I think it will be very well managed, except for the food subsidy, which should increase to 136,000 crores. Apart from that, I think the first fertilizer subsidy at 64,000 odd crores, and the fuel subsidy, specifically with under recovery is going down, should get curtailed below 30,000, close to that 25,500 odd mark. So clearly the thrust on the budget will be more to do with how to speed up the investment climate, and that specifically has to do with increased capex towards the infrastructure side. On the rural side, again specifically increased allocation towards roads and highways. From the allocated expenditure of 33,000 crores, we're still assuming a 30% budgetary allocation increase happening this year. Specifically on rural electrification as well, we're expecting 20% increase, and that should probably have a compounding effect apart from the OROP and the 7th Pay Commission recommendations that the government has already given out. So clearly I think the budget is going to be more infrastructure related, more investment related, and the sectors that are probably expected to do well would be consumer discretionary, capital goods, cement and infrastructure.
It is expected to be a rural-focused budget, but especially with the Pay Commission outlay also being identified. Mayuresh, what's the sense you're getting within the consumer discretionary space? What particular stocks, if there's anything that stands out, which would be one of the key beneficiaries?
Largely, I think if you look at the outlay that is coming through of around 1,02,000 odd crores, we're probably looking at the lower end of the value chain consumer discretionary stocks doing well. So I think a lot of the stocks which probably cater to branded products, and that might include the suite that Dabur has got, maybe Britannia to a certain extent. You can also include a few of the paint companies, because a lot of the repainting demand if monsoons are also expected to turn better this year. I think that will create an impetus and an automatic demand for those volumes to probably come through. And again, I think specific two-wheelers, specifically catering to rural areas, are expected to do well. So I think you're looking at a lot of these white good manufacturers as well, companies like Whirlpool, a lot of companies which manufacture air coolers like Symphony. I think those volume upticks can be quite evident if the pay commission recommendations go on stream. And again, I think a large part of it will be driven by the rural economy. But again, I think it also hinges on how the monsoons pan out, which again, I think a lot of analysts are expecting that it should be better this year after 2 consecutive failures that we've probably seen.
Okay, let's also get in a view then, Hemain, from you as to what the expectation is when it comes to the budget. Is there any particular sector that you'd hinge towards and watch out for when it comes to commentary?
Something on the PSU bank side, Avan, and something which I don't expect and which could be technically negative is the IT sector. I think that remains relatively impervious or untouched as far as the budget is concerned. So if that remains untouched, the BSE IT index is in a distribution pattern, Avan. One gets the feeling that it's in a descending triangle on the monthly chart. I would be bearish on the sector as a whole, and assuming that nothing positive comes in the budget, don't expect that to happen. I think a break below 10,100 would mean weakness in the IT sector. So this is one thing I would look out on, but from a negative point of view on technical parameters.
The other area of focus is going to be infrastructure, and Mayuresh, of course, we did touch upon that briefly, but of the reports that have been floating around, it's expected just that purely for the road sector alone, they're looking at and they're asking for allocation to be doubled to close to 80,000 crore rupees. What's the sense you're getting, for the road sector, especially, given how players have become, increasingly quite reluctant to go ahead with the BOT model? Do you think it'll be the hybrid model that would lead to more projects being awarded? And along with that, of course, Gadkari's aim of moving towards a 30 kilometers a day of a road construction target.
So clearly what the road minister has envisaged, I think he is pretty confident of achieving those targets that you pointed out. But again, I think the hybrid model is the way probably to look at awarding road tenders, and that bidding will probably attract a lot more asset developers to probably come through, specifically on the roads and highway side. As I mentioned earlier, I think our own expectation in terms of what budgetary allocation had happened from an FY16 perspective of 33,000 crores, specifically for roads and highways, I think that take should increase by 30% more for this fiscal. So we're probably looking at figures anywhere between 42 to 43,000 crores, specifically happening only from the budgetary allocations, and the other funds that probably come through in terms of borrowings. I think that combined figure will be in excess of 85,000 crores.
Mayuresh, a lot of people have sent in questions and would like to know, ahead of the budget, there are going to be individual sectors that, of course, will be impacted. But take us through which are your top bets within these sectors and what can likely be influenced positively by the budget.
Well, clearly, as I mentioned earlier, infrastructure is something that we believe that the additional capex of 43,000 crores will come through, and that will definitely have a boost in terms of how the investment climate will be perceived. Having said that, a lot of these EPC players should do exceedingly well. So players like KNR Construction, road players or asset developers like Sadbio Engineering are expected to do reasonably better if the budget recommendations, as we expect, come in their favor. A lot of the urban-centric companies like L&T or NBCC within the capital goods space, where a decent amount of outlay can also happen towards smart cities, and we've already seen 3 freight corridor announcements being done by the railway minister. I think these things will be positively impacting stocks like an L&T. NBCC again, I think, will be a clear beneficiary in terms of urban development. On the rural thrust, again, as I mentioned a few stocks earlier, our own take is that the budgetary allocation increase of more than 10% for a lot of these social initiative schemes run towards rural development specifically should augur well for companies like a Symphony, for a few of the FMCG players as well. And clearly, I think even from the auto universe, I think our own take is that a few of the two-wheeler companies, something like a TVS Motors, should do exceedingly well. The kind of expectations that the management has, specifically in terms of rural thrust and improving their market share, should do well. Within housing finance companies, our own take is that any increase probably in exemptions will have a positive impact in terms of a lot of these mortgages and affordable housing kicked off in a big manner. LIC housing is reasonably valued, and again I think LIC housing is something that we'll probably like from a couple of years time horizon.
Gentlemen, hold on to that thought. We'll take a quick break on the show then, and on the other side, of course, discuss lots more stock ideas, both from a trading as well as an investment perspective, in what promises to be a very important week for the markets. Thanks for staying on with us right here on BNSM Weekend.
Well, let's focus in on the markets, and it's been a fairly choppy and volatile week after the Nifty broke some very crucial levels on the downside, sub 7,000, and finally we ended at about 7,029 for the week gone by, 2.5% meltdown. Hey, Main, let's get in your thoughts. It's going to be a very crucial week for the markets. Take us through the levels that you're mapping out on the Nifty.
I think a close below 6950 spot one is going to be bad. I think that looks like happening. It is a question of when. On the upside, 7250, 7280, and lastly 7380. So a couple of levels of these. Once again, they seem as of now not easily being overcome. So unless there's a fantastic budget, on technical parameters, if these levels are not overcome after the budget, this bounce back, this pullback would probably fizzle out and we'd start going down again. And for a confirmation, once it closes below 6950, we'd see further pain. So it doesn't, on technical parameters, it doesn't look good. Having said that, a small bounce just before the budget starts or just during the budget or after the budget cannot be ruled out. We being down almost 300 points, Avan. So a small recovery, which as of now seems unsustainable. So that's the bigger picture. We are in a medium term and probably we are in an established intermediate downtrend. A little bit oversold situation on the short term charts is seeming to be a saving grace for the time being.
In fact, touch and go with those one-year lows really on the benchmarks at this point in time. Meanwhile, let's focus in on some specific ideas. And Mayuresh, you were, of course, flagging off how infrastructure stocks would be one of the key beneficiaries. You briefly touched upon KNR Constructions as well. Run us through some key ideas that you would be recommending for the week.
So apart from what we discussed, I think KNR Construction is something that we're very optimistic about over the next couple of years. The budgetary announcements specifically related to roads, highway sectors should impact positively companies like KNR Construction. So with a year's time frame, we've got a target of close to 600 for KNR Constructions.
Okay, there you have it, some investment ideas. And what is the next call after KNR?
Again, I think defense as a space has been largely favored by this government. If you look at the budgetary allocation of FY16, 86,000 odd crores was allocated to defense. And our own take is anywhere between 10 to 15% increase allocation happening on this front. Bharat Electronics is a very key player and a key beneficiary of the initiatives that the government is taking towards the defense sector. So clearly from a valuation as well as an earnings perspective, Bharat Electronics from the defense space is something that we are very optimistic about. And we've got a target of 1440 over the next 12 months.
Okay. Well, that's from the infrastructure side, really, the names that Mayuresh is picking up. But Himit, give us a sense of some of the technical ideas that you're working with right now.
Yes, like I've mentioned, I'm not too comfortable with the market. So I have a couple of sell calls. They're trading sell calls. Firstly, I have a sell call on Tata Global. Tata Global is in an intermediate downtrend. we are seeing a recovery of sorts. It looks unsustainable. There could be a small bounce, and I'm anticipating that. That's why I've given the call slightly higher than current levels. So one can sell Tata Global at around 110 with a stop loss of 115 and a target of 90. This is probably a 3-week sort of a call. Secondly, I have a call on Arvind Mills. We walked into a correction of Arvind Limited. We walked into a correction of a greater degree. We slipped into an intermediate downtrend. I think this could get exacerbated even further. We are in currently a sideways distribution pattern, and I anticipate a downward breakout once the event risk like the budget is out of the way. So a sell in Arvind at around 280, the stop loss of 295 and a target of 250.
Okay, let you go on that note, gentlemen. Thanks so much, Mayuresh as well as Himen, for joining in with your expert views. And with that, it's a wrap on this leg of Buy Now Sell Now weekend. Thanks so much for watching.